Hey everyone, it's Kayla Butler, your favorite real estate agent, and today we are going to be talking about refinancing versus home equity lines of credit. I have with me Jason Rosenthal with Sweetgrass Capital, and he's going to be telling you the differences between the two and also shed some light on the pros and cons and maybe help those homeowners that already have home loans know which way they should go if they're looking to refinance or if they're looking to do a home equity line of credit.
A refinance, you're paying off your existing loan with a new loan. And sometimes your intent is to just lower your interest rate and payment. Sometimes your intent is to maybe keep the payment around the same, but if rates dropped, you could maybe drop down to a different term. Maybe you had a 30-year loan and now you want to go to a 15-year loan because rates have dropped and maybe your payment will remain the same. Or finally, maybe you want to take cash out from the property. So you're going to increase the loan with a new loan from what you had before. A home equity line of credit, you're tapping into the equity in your house, but you're leaving the mortgage that you have untouched. You're basically putting a second mortgage behind the first mortgage you have. But what's great about a home equity line of credit is that I would say the best way to describe it is kind of like a credit card, but it's secured by your house. It's a revolving line of credit. And what that means is that you could tap into it, you could take money, you could pay it back, you could tap into it over and over again and keep paying it back. And you're only paying interest when you use it. So you could set up a home equity line of credit and never touch it. You won't pay any interest on it. But as soon as you do use the line of credit, then at that point, you're going to be paying interest just on the amount you use. So let's just say you set up a home equity line of credit for, say, $50,000, and you've only drawn $5,000 of that line. You're only paying interest on the $5,000 you've used, not the $50,000 that's available. As a lender, we will certainly allow, we call it secured funds. And these are monies that are not liquid in your checking or savings account, but it's secured by the house itself. So we as a lender certainly have no issue with using a cash out refinance to facilitate a down payment on a new property as an investment property. Same thing with the home equity line of credit. If you set up the home equity line of credit and you fall in love with an investment property that you want to buy, we'll allow you to extract cash from that home equity line to facilitate that down payment. And I think it's a great solution. It's actually something we see all the time because most folks want to own more real estate, but it's just, they don't want to have to take the additional time to save up for that down payment. They already have it with the equity in their house, and they're putting that equity to work for them, creating more wealth. I think it's a great solution.
Yeah, you guys. So this is another great reason why you want to own a home so that you can pull that equity out and use it to buy more property.
Well, if your goal is to take cash out of the property, then you really do have to weigh the differences of, well, should I replace my existing loan with a new loan at a higher balance and just keep the cash difference? Or should I leave that loan alone and just add the second mortgage to allow me to withdraw cash whenever I want? I would say, look, if your first mortgage is at a high interest rate, I would say do the cash out refinance because you're going to end up with a lower interest rate on everything. The loan that you already have, plus the additional cash that you want out. If you have a great interest rate on the loan you have now, and maybe you're just setting up the home equity line for the opportunity to be able to take cash out down the road. Maybe you just want it for emergencies, a medical issue. Maybe you just want it so that you could consolidate other debts. So it really doesn't matter what you want the money for. But I would say if it's a situation where you know that you're going to pay the money back quickly, then I would say go with the home equity line of credit. If you think that it's going to take a long time for you to pay the additional cash that you want back, and I would say that your first mortgage is at a higher interest rate, I would say do the cash out refinance, take the cash that you need, pay off the loan that you already have, and then have both monies at a lower rate.
Okay, and does your company at Sweetgrass do both? Do you do home equity
We
lines?
we do the cash out refinances, and then we'll partner with sister banks and credit unions to facilitate the home equity lines of credit. So I can help with both, but my company itself will do the cash out refinance. It really depends on their situation as far as what type of income do they have. For most folks that are W-2 employees, we're typically going to ask you for your last 30 days of pay stubs, W-2s, maybe tax returns from the last 2 years, bank statements, your homeowner's insurance. We want to reuse the same homeowner's insurance you have on the new loan. So that's going to be the majority of documentation we'll ask for. Little things like driver's license, social security card, probably too. But for the most part, I would say most borrowers, it's pay stubs, W-2s, bank statements. If you're self-employed, we're definitely going to need the tax returns. And if your sources of income aren't really from employment, they're more from passive sources, such as child support or alimony or social security or disability, we're going to ask for other things that are more appropriate. For alimony or child support, we'd probably ask for a divorce decree. For social security, you usually get an award letter in the mail once a year that says what the income is and 1099s. So based on the borrower's situation, I'll put a checklist together that's appropriate for them.
Oh, good. So if they want to do a home equity line of credit or a cash out refinance, how can they reach you?
Well, please call me, Jason Rosenthal, 843-901-0668. That's 901-0668, and I'd love to help.
You guys, if you want to hear some more information on how you could either do a home equity line of credit or refinance, definitely reach out to Jason. If you have more questions about it, comment in the comment section below. Let us answer those questions for you, and let's get you started with more investing in the real estate and putting that money to work. Thank you guys. Bye-bye.